Okay, time to throw in some formulas. So I'll try to move a little bit quick. Actually, let's start up here. So a lot of this is the same concepts as on the P&L. You know, we want to sum upwards. Anything we copy across, we're going to use our paste formula. One thing I noticed here is it's numbers format. So let's just highlight the whole kind of section where there's going to be numbers, hit our $sign and get rid of the cents, and simple as that. Here we could actually, since we were totaling up just two numbers, that's what we're totaling here, we could just copy this line. You could also just rewrite the formulas in here. Let's move over so you can see what I'm doing. There we go. You can always remember, hit F2. Go to any cell, hit F2, and it shows you the formula, and we see that's good. Then total assets is going to be this number plus this number. Same thing. Let's copy across our formulas. And here we'll do the right-click version, formulas. Here, current liabilities is just one number. The one thing I'll warn you about, when you have one, let's just put in our formula. When you have a formula that's just referencing one cell and say we inserted another row here, this formula won't necessarily capture it. Same thing here. If you inserted another row below this one, that formula won't necessarily adjust. So you're better off, if you can, inserting between two, and then the formula will capture it. When you only have one, you pretty much just want to rewrite your formulas here for totals. Same thing here. We just have one. Our loan line, I'm not sure if we'll necessarily use that. And then for total equity, it's going to be the three rows above it. So let's just rewrite a formula. Not that hard. I mean, it's kind of whatever your preference is within Excel, how you want to do it, whether you want to copy down formulas or just rewrite, write a new formula for each section. And then here, this will be our current liabilities plus our long-term plus our equity. So again, all I did was hit the equal sign to prompt it to write a formula, and then I just arrowed to the cells that I wanted, hit a plus sign, and then arrow to the next cell, etc. Let's copy this across, and formulas. That is it. We have our formulas. There's no totals across the way, so we're good on that front. So the next thing to do would be to start figuring out, where do numbers come from for this? Because this is the tricky part of the balance sheet, because with the P&L, most of the numbers just came from our assumptions. With the balance sheet, they'll come from our assumptions, but it's not as quick as just link it to a specific number, multiply two numbers. Now each of these kind of comes from different areas of sorts, so we might not actually be able to finish this until we build out a few more of our spreadsheets, but we at least have it set up. So let's just go through though really quick and see which ones we can write. So for cash will typically come from your cash flow statement, which we haven't built yet, so we're going to have to leave that line empty. Your accounts receivable, we said back on our assumptions that accounts receivable, where is it, is a percentage of sales. So that is a formula we can write. So I'm not going to write it. Let's go through each of them. I'm just going to put a little X here, meaning we're going to do this one. Our computers will probably come from a fixed asset spreadsheet. Now, some people would just build it in the assumptions, like a fixed asset section. Actually, that might be, now that I kind of think this through, that might be the way to go on this model. If you have a really elaborate asset plan, you're going to be acquiring all kinds of different assets and different timing, you'd probably want to build out your own fixed asset spreadsheet. In this case, we're just going to kind of assume that, we buy some desks and maybe we, buy some more each year. We might actually put a section here on our assumptions tab just to drop those numbers in, and then this will just read off of it. Same thing with computer equipment. So let's do that. Let's put an X here and an X here. We're going to do them, but first we're going to jump back and put them on our assumptions first. Accounts payable, if you remember, on our assumptions was a percentage of operating expense. So that's one that we can calculate now. Our loan, I'm not going to put in a loan. So we're just going to actually put in zeros for this whole. And if you want to copy a number across, same thing, copy, right click, but instead of doing formula, this time we're going to do values. The value was 0. And that way we keep our formatting. So the reason I'm not doing a loan is just one, to keep this fairly simple. We're assuming there's going to be investors, so that you're getting equity from capital in that sense. So we're not going to have a loan. If you did have a loan, you're taking out a loan, it might be a similar thing where just on the assumption spreadsheet, you could build in a loan section. Here's how much the loan is, and then you could factor that in. And then as you pay down the loan, it would reduce your loan balance. So capital investment, we can put in. We had our owner investment to date and our round A investment. And then round B, we just kind of need to decide when that's going to be. The only thing is we don't know when it's going to be yet. We haven't done our cash flow statement. So I kind of want to leave this empty for now, and let's figure that out later. So retained earnings and current net income, this one we can do as well. These are both driven strictly off the profit and loss. Okay, so first let's just kind of work our way down. Once we get to here, we'll have to jump over and make some quick assumptions. So accounts receivable, just to show you the process. And actually, let's do accounts receivable and let's do accounts payable since they're similar. And then maybe we'll end this video and then we'll come back and do the rest of the X'd out versions in the next third video here. So for accounts receivable, we said it was going to be, just going to our assumptions tab, 50% of sales. So whatever sales are in the current month, we're assuming that there's going to be a receivable of about 50% of that. So we're going to write a formula. We're going to hit equals. We want our assumption, which is 50% times, and then off our P&L, so now we're using numbers off two spreadsheets, our total sales for that period. So the sales were 950, and we say our receivable is 475. Now, if you look at this formula, it's a little bit, I don't want to say messy, but if you looked at this formula, you wouldn't know off the top of your head what it's calculating. You'd see assumption C67, P&L C9. And hitting F2 doesn't really work. It brings up the formula, but you can't see which cells are highlighted because you're not on those spreadsheets. So you just need to be a little bit careful when you're editing or you're copying these formulas. You could certainly, if you're uncomfortable, just go through and do each one individually. But I think that's, we just need to use our brains a little bit and figure out what it is we want to do. So for one, we always want to use 50%, and it's always in C67. So for the C67, let's lock it with some dollar signs. So no matter where we copy this now, it's always going to reference C67. So that part is fixed. Now on the P&L, we want to read the revenue, but remember we have these jumps where we don't need this number. We need the individual quarters. And on here we don't have totals, so the spacing is different, if you will. So we're good to copy through year one. So let's start with that. And paste our formula. Okay. So let's think about this. If we copy this formula over here, let's just paste it. So here we went from P&L F9 to P&L G9, which is the next row. But G9 is our total here. We actually want H, so let's just change that. And knowing that, and now we should be good for the next four. Let's just paste that formula. Here we know the same concept, so we can paste the formula. We know that we needed to actually move ahead one more, so L, it's going to be M, and we can double check that. Yep, we want column M for this one. So we changed that already to M, and let's just copy that across. And it's as simple as that. It can sometimes seem daunting, you have all these cells to fill, but really it's just kind of here where there's a bit of a trick, and then you're able to copy across. So not too bad. So let's do the accounts payable just because it's a very similar concept. So we said accounts payable is going to be a percentage of our operating expenses. So let's start with just writing our formula. So we want to grab this and we want to multiply it. Now, we don't have we said we didn't want to include salaries because salaries will be paid in the period that they're earned, unless obviously there's always exceptions to the rule. But in our case, we're just assuming you know, most the salaries are always going to be paid in the month, so wouldn't really be fair to include that in accounts payable calculation. It's going to be more the G&A and sales and marketing expenses that are being included. Depreciation should not be included. It's a non-cash expense. So really, it's the sum of these two numbers that we want to multiply by. So how do we do that in our formula? So we have P&L. So it's going to be multiplied by, and I'm going to do sum. I'm actually going to put some brackets here. Sum of these two. And that should work. Let's hit enter and see what happens. Okay, there's a problem. So whenever, and this is good because we get to see. So whenever there's a problem, it will try to fix it. And the problem was I think I didn't put in enough brackets. So hit yes. So 67K. So let's just see if that seems about right. We had 113 in expenses. We said we wanted 60% of that. That looks right. I mean, we could certainly do the math exactly, but I can tell you that that would be correct. So now this formula, just going back to this formula before we start copying, is a little bit more complex because we're taking our assumption, which is the percentage, times the sum of two numbers now off the P&L. And the reason I put the bracket around that is, I mean, I probably didn't need it in this case, but when you start getting more complex formulas, the way Excel works is it just reads straight across and does math. It doesn't follow kind of the rules of math where, you know, you first do multiplications, then you do additions. I'm not even sure if that's correct. I'm trying to think now. Nonetheless, we kind of force it to sum first and then multiply, rather than if it was to go across and you had multiple additions and multiplications, it wouldn't necessarily follow the correct rules. So that's the purpose for the bracketing. Same thing while we have this open, we want to lock this with the dollar signs. And now let's just copy this across. And same thing, we're going to have to adjust for right, I don't know if it finished, there we go. For right here, it's going to G, we want it to go to H. And remember, we used H up above as well. That's where we get that consistency in our, and I think I saw, not a problem, but yep, we see here whenever I copied it, for whatever reason, I just seeing if it did it up here. Nope, it messed up, if you will, and maybe I just pasted. I didn't hit paste formulas. So actually, yeah, that's what I did. I didn't hit paste formulas. Okay, and here we wanted an M. And we will put in our formulas. Now, so we're going to stop this video, and then we'll come back and do the rest of these. I'll just say, this is how you kind of have to do it piecemeal, line by line. Once we get this whole thing built, one of the quick ways to check your accounting skills, if you will, is the balance sheet should balance. And if it doesn't balance, that's where you really get to hunt and peck and figure out, okay, what's the problem? You start looking at what the difference is. If you have two totally different numbers, okay, where might that be? Because really, we're going to be pulling in numbers here, obviously, from the P&L, from our assumptions. We're going to be pulling in a number from our cash flow statement. So it really is linked together when it works. That's terrific, and it will work. But sometimes when we build these things, 9 times out of 10, there's some number that's incorrect or formula is miswritten, and then that will show up here when the balance sheet doesn't balance. So in the next video, let's do the rest of these sections that we said we'd fill in.